what kind of investments are you guys offering, and what do you mean by alternative investments?
These are investments you can't access normally. And then our bread and butter has been what we call pre-IPO or growth equity companies. So investments in private companies like SpaceX, OpenAI, ByteDance, Neuralink, Anthropic, things like that.
About AI, do you guys have any theses on AI itself? Is it a bubble? Is it not a bubble? Is it already past the big growth stage, or is it just getting started? What's your personal take on it?
Right now, I think the market is asking, you're investing so much into AI. Are people actually going to see an ROI on that investment? And there's a lot of skepticism that AI can deliver on that promise. I think we're still sort of in the early stages of seeing the capability of these models. And it seems to be like we're on that exponential curve of growth. Certainly it could be a bubble, if progress stops where we're at now and intelligence sort of flatlines based on hardware growth.
And so if somebody's talking about, let's say, OpenAI specifically, I think right now there's probably two different ways they can go about it. Someone can say, I'm going to wait till the IPO and just buy it on the stock market. Or I can say, hey, I'm going to reach out to a company like Upmarket and try to kind of get in on it earlier. What are the pros and cons of each approach?
There's typically more fees associated with private investment. And then there's a cyclical nature of them. And the nice thing about public equities waiting until a company IPOs and buying shares then is if you want out, you can get out anytime there's regular trading hours. And when thinking about a private investment, you have to think about liquidity, your willingness to tolerate risk and drawdowns, where you are in the cycle. And you also need to think about the valuation at entry. Then to go back to the public side, waiting till IPO, the benefit there obviously is having liquidity, being able to trade in and out of the position. The downside might be that you've already missed a lot of the run.
What type of products have done really well over the last 5 years, and what kind of products are you excited about?
Well, one of the pre-IPO offerings that is most popular is definitely SpaceX. Other opportunities I'm excited about, I get a little wonky and get interested in some of the hedge funds and unique strategies we have. We have a fund that we just launched that trades cryptocurrencies. It's an algorithmic sort of professional firm that deploys a lot of the traditional finance arbitrage strategies and things like that.
This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. My guest today is Mike Ivansy. Mike is the Chief Marketing Officer at Upmarket, and Upmarket is helping bring exclusive investments to everyday folks. Mike, welcome to the show.
Hey, Gabe. Thanks for having me. Excited to be here.
Mike, everyone knows somebody who's selling mutual funds and everyone knows how to buy stocks, but Upmarket is a little bit different. You guys deal in what are known as alternative investments. Maybe let's start off with that definition. What kind of investments are you guys offering, and what do you mean by alternative investments?
Yeah, well, thanks again for having me, Gabe. And so alternatives, broadly, just to speak to it as simply as possible, these are investments you can't access normally. So outside of traditional public equities and bonds, so assets like hedge funds, private equity funds, debt instruments, private debt, private credit, things like that. And then our bread and butter has been what we call pre-IPO or growth equity companies. So investments in private companies like SpaceX, OpenAI, ByteDance, Neuralink, Anthropic, things like that.
So when people talk about a company like SpaceX or OpenAI, these are obviously not companies that are on the stock exchange. So some people might be surprised. How can you invest in a company that's not on the stock exchange?
Yeah, well, there are a few limitations and guardrails that we have to follow. We're regulated broker-dealer here in the United States. And so we can only work with accredited investors, and sometimes that's qualified purchasers as well, which is kind of another hurdle above accredited investor. But accredited investor have certain income requirements, making, I think, more than $50,000 a year or more than $1 million liquid net worth. But if you meet those qualifications, you have access to unregistered securities. And basically that's what Upmarket does, is we find ways, we build access funds, we work with venture capital funds and other funds to buy shares in these companies, typically on the secondary market. So what you'll often hear is these are venture secondaries. And what that is, just like the public stock exchange, there's a robust marketplace to trade shares. You're open from 9:30 to whatever it is. I'm always thinking West Coast time, but during those trading hours, you can trade stocks. Well, there's also private markets. And so broker dealers like Upmarket, we work with larger broker dealers too that trade big block shares of these companies. So for example, there may be a seller that comes to the market and says, I want to sell $50 million of my SpaceX shares that I hold. I'm a venture fund. Maybe they want to get some liquidity and allocate to something else, go, earlier growth stage companies or something like that. That offer goes out into the market, and people that are buyers in that market, the secondary market, like Upmarket, will commit to buying a tranche of those shares, say 5 million of that $50 million chunk. And then what Upmarket does is we break that 5 million piece up into 10 pieces or 100 pieces, whatever it might be. And then we make it accessible to accredited investors. And so typically, most people don't have $5 million to allocate to one company like SpaceX. It's sort of nonsensical or a non-starter from a risk management perspective, right? So they can't go to these big brokers and do that. But what we do is we cut it up into smaller squares or bite-sized chunks that, accredited retail investors can then access. So it's kind of simplifying that process. Our investment process is all online, but really it's providing access to these opportunities is what our focus is. And same thing with hedge funds or real estate funds. There may be, certain hurdles there where typically they're only working with an LP that can invest $20 million, $5 million, $10 million, whatever it might be. We can create an access fund and then make it easier to break things into chunks so that 100 retail accredited investors can then enter into that opportunity opposed to being excluded from it. Because a lot of these opportunities historically, you're really ultra high net worth individual. You have JP Morgan, private wealth, or other organizations like that. They'll give you this kind of deal flow because you're a premier client and you have the capital to invest in big chunks like that. And so what we're trying to do is increase access for the most amount of people we can. Obviously, we have to recognize, we can only work with accredited investors. Me personally, I'd love it if we could offer these sort of opportunities to everyone, but we have to honor the regulations and make sure we're compliant there.
Earlier today, I had a chance to look at your website, and I really like the fact that anyone can go in. You don't have to be a member. You don't even have to log in, and you can see the different types of investments and funds that are open right now for investment. And I was quite surprised by how varied they are. You have some funds that are real estate based, some that are crypto based, some that are energy funds, some that are individual companies. How do you select? What is your selection and due diligence process for choosing these investments?
Yeah. So Upmarket has an investment team, and then we have a investment committee where we talk about these opportunities and evaluate them. And so really to start with, there's kind of an ideation phase, which is, okay, what do we have on our platform now? What are investors interested in? And maybe what are trends coming in the future that we think are compelling and might help people add diversification? So ultimately our goal really at Upmarket is to give people the opportunity to diversify. The way I explain it is, you have a big meal you're going out to. Think of the steak and potatoes you're eating as your 401k. Maybe you're invested in index funds, but then you have a little extra money and you say, I want to diversify a little bit. Upmarket's kind of like your dessert. You can say, okay, I'm really overexposed to technology, or I'm really overexposed to this. How do I add some portfolios or funds that are not market correlated that could help my portfolio do well, generate positive returns, but also really do well in a downdraft? If there's a market correction, something that's not correlated is going to be very robust, hopefully, in that environment. And so we're kind of thinking about that. And you asked, how are we selecting or finding funds? One example is AI is a huge trend, right? Everyone's talking about AI. It's the hottest thing in the world. But embedded in the AI theme is this idea of energy demand, right? And McKinsey came out with a study saying, from 2023 to 2030, energy demand just from data centers is going to triple. And then you look at where the US gets their energy now, it's predominantly fossil fuel. So it's 43% natural gas, 16% coal. And so my hope is, of course, that nuclear really takes hold. And, a lot of these data centers are powered by renewable or nuclear energy. But realistically, looking at the current state of energy markets, it's 60% fossil fuels. And so we were talking about this trend internally on the investment committee, and we're saying, okay, AI is a huge trend and we want to be able to give people exposure there. But what about hedge funds that specialize in trading natural gas futures or energy futures? Because certainly price could just trend up if nothing changes, right? And demand increases and supply stays the same. But more than anything, it's probably going to lead to volatility in these markets, natural gas markets, coal markets, whatever, power markets. And wouldn't it be great if we just gave our investors the opportunity to invest in professional managers that know these markets and can take advantage of what we think, our hypothesis being that there'll be tailwinds for energy markets and the supply and demand dynamic in those markets for the next, 5, 10, 15 years. And so that's kind of how we do that process. And then as far as diligence, we have folks on the investment team, they're talking to these, it sort of depends on the product type, but they're talking to the manager, sort of evaluating them, doing in-person visits, obviously reviewing all their materials, making sure they're audited, all of that. And then they have to clear diligence. There's an investment memo, there's a voting process, and we go through all of that. And only then are we onboarding the product.
And Mike, I think you touched on two different things. One is the financial advice side of things, right? Like how does an investor diversify their portfolio and how do they diversify risk? And then the other idea is, hey, look, check out this really great investment. Let's look at the risk reward profile. Are you in the financial advice space at all? Do you actually offer financial advice to your clients?
No. So Upmarket is a broker dealer. We're not a registered investment advisor at this time. Certainly that could change in the future, but we're really not in the advisory business. We do work with some advisors now and family offices, multifamily offices, and they sort of take care of the advisory piece. What we're really doing is saying, if you're an accredited investor or qualified purchaser, join our website, register, create an account, and then we'll just send you opportunities. And then you decide what fits your needs at that time. The idea is really investor empowerment by providing access and then leaving the choice to the investor.
You mentioned one of your investment theses being a play on energy, which I think it's brilliant. I think it's a really good kind of secondary play to AI, right? About AI, do you guys have any theses on AI itself? Is it a bubble? Is it not a bubble? Is it already past the big growth stage or is it just getting started? What's your personal take on it?
Yeah, definitely. I can't give investment advice, and I wish I could predict the future because I would invest accordingly. I think right now, personally, and I think in the market generally, there's this big question of we see all these companies investing billions of dollars. So the hyperscalers, the Amazon, Microsoft, Google, Meta, they're investing billions of dollars. I think to start the year, Microsoft came out with something saying they're going to invest $80 billion in AI data center build out and related AI expenses for their fiscal year. And so you see all this investment. These people I trust are much smarter than I am. But right now, I think the market is asking, you're investing so much into AI. Are people actually going to see an ROI on that investment? And there's a lot of skepticism that AI can deliver on that promise. Me personally, I use these tools a lot. I use ChatGPT. I use Anthropic's Claude, which is, I think, a tremendous product. And I think we're still sort of in the early stages of seeing the capability of these models. And it seems to be like we're on that exponential curve of growth. And historically, I try to be a student of the markets, but human beings usually can't fully appreciate exponential growth curves. And I think we're kind of in one right now. Certainly it could be a bubble, if progress stops where we're at now and intelligence sort of flatlines based on hardware growth. Nonetheless, NVIDIA has shown some impressive promise lately, but it seems like we're in that exponential phase of growth. But it also could be one of those things where I could be right about what I'm saying right now, that exponential growth is happening, yet all the spoils could accrue to one firm. right? Say OpenAI achieves AGI or superintelligence or it's Anthropic or whatever, perhaps all the capital flows to just one firm. And, then the spend from Amazon and Microsoft and all these other firms, unless they have a really strong partnership or ability to monetize their relationship with that one winner, it could be challenging. So I don't want to sound like I'm hedging my bets. I think I am somewhat because it's really hard to guess where the future is going. But I'm a believer in AI generally. And as a platform, Upmarket is sort of taking the position we want to offer these opportunities to people. And if they want to invest in AI companies, great. If they think it's a bubble, that's fine too. Stay away. But I think personally, there's a lot of promise in the technology and the pace of innovation we're seeing. OpenAI, the ChatGPT product, I think reached 100 million users faster than any company ever at the time. It launched back in October, December 2022. It outpaced TikTok, which was at the time, it was sort of unbelievable that they grew to 100 million users at the pace they did. And OpenAI did that even faster. The pace of innovation has been really impressive, and I don't really see a lot of evidence that it'll stop. But the real question, I think, is, and how markets are looking at this, is will that pace of innovation also lead to meaningful revenue and payback on these AI investments?
And so if somebody's talking about, let's say, OpenAI specifically, I think right now there's probably two different ways they can go about it. Someone can say, I'm going to wait till the IPO and just buy it on the stock market. Or I can say, hey, I'm going to reach out to a company like Upmarket and try to kind of get in on it earlier. What are the pros and cons of each approach?
Yeah, well, I want to be fully transparent about private market investing. There's a whole host of challenges and risks and things that come with private market investing. Just to name a few, there's tax implications that maybe are a bit different depending on hedge funds, these pre-IPO investments. There's typically more fees associated with private investment. And then there's a cyclical nature of them in the sense that if a pre-IPO market, which I'm going to refer to it broadly as all these kind of private growth equities, if the market is down, as we saw, post 2021, 22, 23, there's no IPOs happening. And so there's no off ramp. And what that means is your ability to get liquidity is greatly hampered. The nice thing about public equities waiting until a company IPOs and buying shares then is if you want out, you can get out anytime there's regular trading hours. And nowadays, even they have, weekend trading on some of these platforms like Robinhood or whatever. It's very easy to buy and sell. With private markets, you have to find a willing buyer in the private marketplace, the secondary marketplace, to exit. And that is generally possible, but it definitely may not be at the price you want. And so when thinking about a private investment, you have to think about liquidity, your willingness to tolerate risk and drawdowns, where you are in the cycle. And you also need to think about the valuation at entry. A lot of these companies sold in 2021 secondaries like OpenSea. That's a great case study. That was the hottest thing in the world. Everyone's buying pet rock NFTs and thinking they're, going to be the next billionaire. And that company, I don't know the exact where it's trading right now. I could look it up, but I think it's down 60, 70. And so valuations matter. Fees matter. Liquidity is definitely the biggest one. And then to go back to the public side, waiting till IPO, the benefit there obviously is having liquidity, being able to trade in and out of the position. The downside might be that you've already missed a lot of the run. So just in the last year and a half or 2 years, we've seen OpenAI, I think there was a trade around 90 billion. And then most recently, I think we closed around or investment around 150 billion, which was in keeping with what the primary round they raised. And so if by the time OpenAI IPOs, it's a $1 trillion or $2 trillion company, you're kind of late to the party. And then you have to ask, okay, well, how am I going to build a pro forma sort of valuation at entry to get a positive exit on this? Is this going to become a $5 trillion company, a $10 trillion company? Certainly possible if they, deliver on their promise of AGI or super intelligence. You and me and everyone else is replaced by an AI agent. We don't even have to do podcasts anymore. We just have an avatar of ourselves speaking to each other, which sounds very dystopian to me. And that's a whole nother part of the AI world that I think is really interesting, is what is the future of work and all of that. But the downside of waiting is, if a lot of the value accrues, maybe you've missed that ability to be invested at 150 billion as it grows to 1.5 trillion, So there's definitely trade-offs. And, we're, myself and the team here at Upmarket, I think we're the first ones to tell people that private market investing, these alternatives are not for everyone. There's a whole host of kind of speed bumps and things you need to be thinking about. And that's why when we were talking a little bit earlier, I talked about kind of thinking about Upmarket as, here's this universe of opportunities. Maybe you do some small sampling, and then that helps build out a more comprehensive portfolio.
Upmarket has been around since 2019, I believe. Right now on your website, it states that you have helped over $200 million worth of investments find a new home. What type of products have done really well over the last 5 years, and what kind of products are you excited about?
Yeah. Well, one of the pre-IPO offerings that is most popular is definitely SpaceX. Investors are very excited about it. Anything Elon Musk, certainly back in the 2021 period when he could sort of do no wrong and had this Midas touch, that was historically quite popular, and it still is. A good example of how popular SpaceX is, they sort of throughout 2024, they're kind of trending towards this $210 billion valuation. We actually closed around investing it around there in December, and then or late November. And then just a few weeks later, they announced a new tender round. A tender round is basically a way for a private company to get liquidity for existing shareholders. So typically employees, like, you're very wealthy on paper, you have all this private stock, but since there's no M&A activity, no one's going to buy SpaceX because it's so big. You do these tender rounds and you let employees sell shares and get liquidity. So the paper wealth sort of transmutes itself to liquid wealth. And they announced a tender round in early mid-December, valuing the company at $350 billion. So tremendous jump, 140 billion roughly jump in kind of a short period of time. And the market seems to be tolerating it. Obviously, SpaceX could trade down in the future. That is a company where SpaceX is one of the most liquid, most traded private companies in the marketplace right now. And then other opportunities I'm excited about, I get a little wonky and get interested in some of the hedge funds and unique strategies we have. We have a fund that we just launched that trades cryptocurrencies, but not really. It's not like some guy just putting his finger in the air, kind of feeling the wind. It's an algorithmic sort of professional firm that deploys a lot of the traditional finance arbitrage strategies and things like that. But they use a lot of technology to leverage and take advantage of price dislocation. So I'm learning more about crypto every day, but there's more traditional finance, or the Coinbases of the world, kind of the more traditional crypto on-ramps. And then there's DeFi, and what this fund can do is actually arbitrage price discrepancies between DeFi assets that are, the same asset, but it's trading on this marketplace versus trading on Coinbase or other platforms, and taking advantage of that. And I think that's really interesting. And when I started at Upmarket back in, I think it's been 3 or 4 years now, there was an interesting fund that we still have. It's a life settlements fund. And I thought it was kind of macabre when I first heard about it, because the idea is you buy and sell life settlement policies. So someone's still alive, they have a life settlement policy, they pay a premium every year, or whenever the premiums are due. And then when they pass away, there's a death benefit. And the life settlements fund, what it does is actually trades these policies. So if you hold that policy, you can just stop paying it, and then you lose everything you paid essentially, and you don't get the death benefit. But you can also sell it on the secondary or tertiary market, and you'll get a higher payout typically than you would from the insurer. They'll buy you out of your policy, but it'll be typically much lower, not always. And so it's a benefit. And typically these are higher net worth folks. And so the advantage there, it's actually not as dark as I thought the more I've learned about it, but your ability to get capital now while you're still alive and enjoy that life insurance policy. And then it's an investment asset, basically, where this hedge fund has a team of doctors and underwriters, and they're looking at your health conditions and your age and all these other factors. And then they're kind of actuarially discounting what they think they should pay for your policy based on expected life. And then if their underwriting is good, the investment will return because they'll pay less than they'll actually get long term. And it's a win typically for the insured because they're getting that money now, they're getting more money than they would otherwise. And so I really am interested in those kind of unique strategies, because if you think about the life settlements just sort of conceptually on a high level, it doesn't matter where the S&P 500 is trading, right? It could be down 40%. People are still getting sick, getting better, and all of those things are happening totally independently of what's happening in the stock market. And that sort of taps into the ethos of what I think we're trying to do here, which is give people the opportunity to invest in asset classes and investments that are not correlated with something they normally would. Because I think a big investor mistake is, say I work at NVIDIA and then I'm like, AI is the future. And maybe it is, certainly it could be. But if you have all of your equity, that you've earned from NVIDIA, you're probably already worth $20 million or whatever. But then you're pouring all that capital into AI firms as well. You're so exposed to that, if there was some sort of drawdown or, the market became really skeptical, you would suffer tremendous losses. Whereas if you're building a portfolio that spreads that capital around different asset classes with different return profiles, you're much better suited to weather a drawdown.
Like a little bit about the nuts and bolts of investing with Upmarket. What type of fee structure do you have?
Yeah, so it depends a little bit on the offering, but typically there'll be a subscription or sort of a broker fee associated with making an investment. And then almost all of these private investments have an annual management fee, typically like 1%, which is to take care of fund administration and things like that. And then depending, some funds, especially hedge funds, crypto funds, things like that, will have carried interest, typically called carry, which is a percentage of profits. So the way it typically works is the manager will take 20% of whatever profits. And sometimes there's a hurdle rate associated with that, which says we won't take carry until, we return over 15%. And then we'll take 20% of all profits from there. And that's why I said earlier, with private markets, fees can typically be higher, because you're paying a subscription or access fee, you got this annual management fee, and then there may be carried interest as well. So the fees can really stack up. And we created a fee calculator that you can use. It's a free tool on the website where you can put in, what your investment amount is, all these different fees that you expect to pay, your hold time, it'll give you what you're expected, what the IRR would be of that sort of pro forma or simulation. But there's definitely fees associated with it.
Like, where can people reach out to you or to Upmarket to learn more? Maybe sign up to a newsletter or some other way to learn more about your offerings?
Yeah, definitely. So visit upmarket.co. That's the best way to kind of learn about our firm and what we do. If you're an accredited investor, we invite you to register, create an account. And once you go through that process, you'll then be able to view all the funds, see what we have open, review all the fund documents, the private placement memorandum, things like that, and also get on our mailing list. The mailing list is valuable just because we're sending out offers. My team's sending out offers. We have this opportunity, we have that opportunity, and, send it to the trash can if you're not interested. But if you are interested, you can indicate interest and then start talking to someone on the sales team and learning more about the opportunity, the structure, the fees, and whether it's a good fit for you. And if we also have, social accounts active on Twitter and LinkedIn, and, people are welcome to email us at invest@upmarket.co. My email is just mike.ivancy@upmarket.co. So if folks have ideas or suggestions for us or for me about content they want to see, I'm always trying to create educational content about, investing in private markets, articles like, what is an accredited investor? We created an accredited investor quiz so people can just answer a few questions and know pretty quickly if they qualify or if they're an accredited investor. So always open to hear, hey, I'd love to, get a guide to this or things like that. I'm working on a private investment checklist now just to help people sort of conceptualize their first pre-IPO investment or hedge fund investment. Is like, what's the fee structure? What are the things I should be thinking about? What are the questions I should be asking? And the intent there is really meant to be agnostic of who you're working with. It doesn't have to be upmarket. as the broker dealer that you're working with anyone, you could be working with any broker, but what are the kind of questions I should be asking? What are the kind of pitfalls that I might fall into if I don't ask these questions up front?
We'll put all those links into the show notes. Mike, thank you very much for taking the time today.
Yeah, thanks, Gabe. It was a pleasure talking with you. You have a great day.
Hey, thanks for joining us for another episode of the Money Seat Podcast. Please remember to click like and subscribe. It really helps spread the message to other investors, and it helps attract new viewers to the show. We appreciate your support. Thanks very much.